Good morning. It's Simon Clarke, CEO of American Lithium, giving an update from our Tonopah office in Nevada. As you'd remember, American Lithium is a developer of lithium in the Americas with two development stage projects, TLC in Nevada, Falchani in Peru. And at the same time, we have a very intriguing uranium asset as well in Peru that we've also been advancing.
That you do, Simon, and we'll talk about that. But I think right now people are excited about the lithium. I'm looking at the markets. People are nervous about what's going on, risk off. Not much action on the equities. However, industry seems to be getting on with the business of doing business. We've seen Ford a couple of weeks ago sign an agreement, binding agreement to secure some of their lithium needs. We're seeing OEMs across the board kind of moving up the food chain, as it were. That must give you some degree of comfort in an equities market like this, does it?
It gives me a lot of comfort. I mean, the last major downturn in the lithium side directly followed the commodity going down. I mean, if you remember, lithium carbonate at the end of 2020 was $6,500 a ton on the spot. Today it's over 70. So yeah, I mean, the last downturn was for different reasons. The industry is doing better than ever. I mean, you just have to look at Albemarle and Livent's results. I think Albemarle had three increases in guidance within a short period of time. And the other interesting thing, if you look at their results there's been their ability to move a lot of their contracts. I mean, lithium as a market is pretty young. So although you have a spot market, most of it is on forward contracts. And so a number of the producers have been able to move those contracts up significantly. We're hearing well over $30,000 a ton. So the sector's doing well. The producers are making a lot of money. By definition, the rest of us are relatively early stage because we're, either explorers or developers and looking to bring projects into production. And so in a risk-off trade, we've been hit somewhat by the risk-off trade, but the overall sector continues to do extremely well. The commodity is very strong. There continues to be a deficit on the demand-supply side, and the other thing you're seeing in spades, Matt, is M&A. You're seeing, as you pointed out, you're seeing the autos and end users vote with their feet, secure offtake, secure investments in earlier stage companies, and you're also seeing the quality assets around the world, particularly South America, get snapped up. We saw Plus Petrol being sold to Ganfeng. If you remember, Lithium Americas bought Millennial, which is the other side of that Salar. So you're seeing quality assets leave and lots of interest in those that remain. So a very good time in the sector.
It's a very good time, driven by high prices, continuingly high prices. But I'm intrigued about how a company like you takes advantage of that, or at least reads or navigates that ecosystem, right? So M&A happening, the big boys are coming into companies that prove that they can produce economic levels of lithium. Awesome. Companies like you need, I know you're sitting on 45, 46 million of cash, but you need to dip back into the market occasionally, but you need to be investable. So how do you paint that picture for the finance guys as you kind of move, through the phases?
Yeah, I mean, it's a great question. As I said, I think firstly there is a dearth of quality projects globally. Yes, we have to do more work de-risking our projects, but especially Falchani is at an advanced stage. There's lots of interest, strategically in that, and also in TLC. But I think, we're not going to get the full value yet for TLC until we come out with our maiden PEA, which, we've been working diligently on. It's taken a little longer than we'd have liked with COVID and other delays, but we're close, and DRA Global is driving that. So I think that'll be a big milestone for us in the US. I think in Peru, it's really been more about ability to get in and do work, really with difficult conditions from the perspective of getting permits approved, with lots of changes in cabinet and government people. But we're starting to get traction there now. We're going to be doing a bunch more drilling. As you would have seen, we're moving it into feasibility. So long-winded answer, but I think for us, it's to continue to focus on advancing the project and de-risking. You know, what Plus Patrol showed, that transaction, is that, you know, the buyers are getting more, you know, they're going further up chain. They're buying projects. I think that one was even pre-PEA. So again, I think all we can do is continue to stick to our knitting. We've had significant strategic interest. I think we'll continue to get that, and you know, as we demonstrate that these truly are world-class assets.
Because like your sector is a very technical one. You know, to produce what you need to produce, it's a fairly technical thing compared to, say, precious metals, right? You really dig it out of the ground, and the processing is well understood, and it's been around a long time. And you know, each asset has its own technical peculiarities and challenges. So again, a lot of companies talking about being able to produce lithium in whatever form that they're claiming won't necessarily be able to. So the companies that can or can demonstrate that they have de-risked their projects will become even more valuable in this environment. So do you mind just sort of giving us an update on I know the PFS. Let's focus on Peru just for a second, all right? So you've got a couple of assets there which have some value, which you've acquired last year. But how do you, in a Peruvian context, you've referenced some changes in cabinet, etc., as well as the technical challenges. How do you move that ahead, and to what end?
Yeah, so I mean, as you remember, when we acquired Falchani or Plateau, the reason we really liked it is it's one of the few global projects that has proven that it can produce battery-grade lithium. It precipitates it through the flow sheet, so you don't have need for further refining or upgrading, which is a huge tick box. And if you remember the issues they had around ownership of some concessions, I think blinded a lot of the market to that. I mean, Plateau, was dealing with those issues. Its shareholders were tired, and I think we got an incredible asset at a great price. So for us, Falchani has always been at the point where it should be in feasibility. We've now started that on the environmental side. The other piece we need to do at Falchani is to get out there and drill, because before we can actually move the whole project through feasibility, we have to convert our resource to reserves. So we need to do some infilling to move the resource to M&I, and then that allows us to do the reserves. So if you like, we've got a dual track going. We've launched into feasibility by getting our EIA going with SRK. What that does in turn is it does allow us to do some drilling around that, which is based on hydrology, but will also give us a good insight into the asset. And we're expecting finally to get our full permits for the bigger program, anytime, which will then allow us, as I said, to excuse me, Matt. It'll allow us to update our PEA from the resource perspective. But the other big piece that's never been done is the byproducts. We've never factored in SOP, which is a major strategic mineral in a Peruvian context. The Ukrainian conflict has really not only impacted fuel prices for a lot of countries, it's the fertilizer side is massive in a country that has a big agricultural sector. So if they can source SOP domestically, it'll be a huge strategic tick. And then as we always talked about, the other one is cesium. So, we have this dual track where we're updating the PEA, but all at the same time launching firmly into feasibility, and the two will come together. And again, because of the work that's done, we see moving through pre-feasibility at Falchani very quickly.
Right, and obviously you got a whole bunch of money available to you at the moment, and it was great. So how much is it going to cost you to get that through to a completed feasibility study? What's the timeline on that?
Yeah, so I mean the drilling that we're looking to do this year, we're probably somewhere in the $4 to $5 million range. The byproduct work, we've already done the SOP as we announced. We're now fully on the cesium side. So, that's not so much. So updating the PEA, a few $100,000, and then the feasibility study itself will involve some kind of pilot. As we've always talked about, we would likely do that with our lab at ANSTO in Sydney. They've had some challenges with COVID, as you know, in Australia, but they're back fully up and running. And so we would look to do what Bacanora and others have done and actually fast track the piloting by doing it under lab conditions. But I don't want to belittle it. It's actually, these are large, it's not a tiny lab scale pilot. It's a proper, bench scale pilot with, which will provide everything we need, as I say, to get through pre-feasibility. So we would look to tie that up as we move through next year.
Okay, talk to me about the EIA process, because South America right now seems in a little bit of turmoil in Colombia, Chile. You name it. Every country's got its own issues, and I guess. As a CEO, you probably tell me it's the same all around the world at the moment, and I probably believe you. But the EIA is prevalent because not just in the context of the kind of ESG movement, whatever one thinks of that, but we've seen governments appoint people who are perhaps a little bit anti-mining. I've read. Where by some groups, and perhaps a little bit too punitive in others. And I don't want to point at any one country or any people specifically, but in that environment, mining seems to have got tougher in the last sort of 10, 15 years. For right or for wrong, it is tougher. It's more expensive. It takes more time to get things done, it seems. Is that, do you think, to the detriment of the mining industry, or do you think actually mining just needs to be held accountable and you guys need to up your game?
Listen, it's we see it in the US as well. There's lots of money coming in from the government, but the big thing that needs to happen, again, by definition, I mean, you look in the US, so probably somewhere around 0.5% of the world's lithium as a raw material is mined in the US. So, but there's 6 major potential mines, including TLC in Nevada that, as long as it doesn't get held up in years of permitting, will be in production over the next 2, 3, 4 years. And that can make a really meaningful difference. But, if it gets mired in red tape and permitting, then that's going to take a long time. So there's this mix. Everyone wants to move to electric vehicles and the new economy, but that necessarily involves more mining. So our goal, and the reason that we've always in Nevada, for example, really showcased TLC's environmental benefits is because, clearly if you don't have endangered species or plants and, major cultural difficulties, you've got a fair chance at moving through the process quickly. I think you're also seeing a will now from the government in the US to help without dropping the environmental requirements or anything like that. But you can fast track permitting by running a bunch of the processes in parallel rather than in series. So, it's I think you're going to see it come, Matt, because it has to. I think in some South American countries, which I know is where you started, I mean, the issue is more at the community level often. And if you think of the high salas in the deserts of South America, in Argentina, Chile, and Bolivia, water is at such a premium there that you have a bunch of communities, despite the benefits that these operations can bring, that are very anti them because of the impact on water in particular. So, I think that's a major issue, and yes, some of the changes in the government don't help. I mean, I look at Peru. Peru is a historic, strong mining jurisdiction. It's got a strong mining code. For all the talk from the left when they, during the last elections, you can't nationalize mining in Peru because the constitution doesn't allow the government to be involved in mining. So what you would have to do is you would have to change the constitution, which good luck getting that through a center-right parliament, et cetera, et cetera. So, from our perspective, that's not been the challenge in Peru. It's really just been the fact that you have a minority government that's been clinging to power, and they've made a lot of changes in a number of the ministers. And so as you try and get permits signed, there's a revolving door of personalities and people. So it's not exclusive to us. I think people on the exploration and development side are seeing longer timelines for permits. As I said, I think we're largely through that now. But the producers in Peru are making money hand over fist, whether it's copper, the commodities have done well. So a long-winded argument. I think ESG is really important. I think you've got to have the right environmental practices, but first and foremost, you've got to have your communities on side, which we do. And ideally you're in a country where there's a strong mining code, and for all the political back and forth, Peru has a strong mining code and practices.
I'd agree with a lot of what you just said there. But again, just sticking with Peru for just a little bit longer, you think that winning people over locally is really important because it's it's them that gets affected. The politics at federal level, I guess, it depends who's in power and what the flavor of the day is. It seems broadly in South America, and honestly just Peru at the moment. But it's very difficult for foreign direct investment to look into situations like that and go, do you know what? I'm really comfortable allocating my capital to a company in South America at the moment. I mean, how much pushback are you getting from your institutional investors about your strategy in South America, having just recently, in the last 12 months, acquired these Peruvian assets, or do they take it as a kind of cyclical, long-term plan?
First off, it's a great question. I think there's a good deal of patience because they recognize the size of the prize with these assets. I think Peru does genuinely, despite some of the political turmoil, I think it genuinely scares investors, maybe less than Chile, even Mexico on the lithium side, and certainly Argentina without the ability to get money out easily. I think they still see Peru as better than that. In a risk-off market, though, you're definitely not getting the value that we would if these assets were in North America or Europe or wherever. But I do think that'll change, and I think the scale of the asset. I mean, this has the potential, in our view, to be the biggest lithium producing asset in South America. It's a hard rock. We're in an area of plentiful water. There's decent infrastructure. We're 40 minutes from the Two Oceans Highway. There's deep ports on the Pacific. There's a lot of things that make sense. And I think the ability to, and again, Falchani's not about the grade. It's like a low-grade pegmatite, but the way the lithium is hosted in a volcanic glass, it's very pure. So when you come to do your met work, it's a relatively simple process to extract it. And the lack of impurities is what enables us to precipitate without too much work or too much difficulty. And again, I'm belittling the technical work that went on. You can produce a battery grade that is now approaching 99.9% on the purity side. So, that's a great asset. And I think people are prepared to be a bit patient. But I do acknowledge that in this risk-off market, Peru may not be the first choice of a number of investors.
But you're saying the scale of the opportunity, because it comes back to that thing of, people understanding, high grade versus low grade versus the ease of processing and the cost of processing. So it's okay. I think you emphasized it as 6th largest hard rock lithium deposit globally. So that's big. It's a question of, how quickly are you able to, confirm the economics around this thing, the speed at which it gets to market, and the sorts of conversations that you're able to have now or at that point, reflecting where we started this conversation, which was OEMs moving upstream, supplying supply chains, lithium prices across the board going up. How do you insert yourself into that ecosystem with this asset? Is it possible, or is it going to be one of those sort of stranded political projects?
Well, it's a great question, and Matt, I would say, you are forgetting that there are a bunch of buyers in the world that have no issues with a bit of political turmoil. We have a lot of, when we bought this asset, I think as I've mentioned previously, we were up against a Chinese buyer, and there continues to be significant Chinese interest. So, just because some political turmoil might put off Western buyers, or it doesn't mean that there's not going to be interest in the asset. And in fact, since we bought it, there is more and more interest in it. There's also a number of large players in country. So, what I would say is the universe of investors and buyers of lithium projects has grown. So, I think if we did look to sell Falchani, and it's not, we think there's a bunch of value we can bring through continuing to de-risk it and move it forward here in a relatively quick time frame. But if we were, I'm convinced there would be, I know there'd be a number of very interested parties.
Right. That's all we want to hear. We want to hear competitive tension, because that drives the price up. That's always good. And we want to hear that you can continue to extract value from it in the current environment. You've got the cash to do it. So look, I guess we're also going to step back and see what comes with the pre-fees work there. Just on the uranium, I know we've talked in the past, and with a case of, do we keep it, extract more value? Do we flip it and extract value? Is it a discussion at your monthly board meetings or quarterly board meetings with how you treat that, given again the vagaries of the uranium market at the moment?
For sure. I think what's become clear to me since we acquired Plateau is that Macusani asset is, probably larger and better than we even thought. As we, yes, we've not been able to do much drilling in recent times, but we've done a lot of field work, which continues to expand the targets on the uranium side, as well as on the lithium side. If you remember, this is a massive plateau. So the pre-concentration work that we've been able to do, again, if you look at the last PEA on Macusani, it's extremely robust. It's got one of the lowest OPEXs on the planet. We now, I think, through the pre-concentration work, I think that PEA covered about 50% of the asset because of the head grade. And again, people do get hung up on grade. That, especially in uranium, we sit right at surface. We need very little acid. You don't need to have massively hot acid or whatever. The op costs at $17 a pound make this one of the most attractive projects on the planet. And what we've seen is it's only going to get bigger in terms of size. So that all said, you talked about us not getting much value for Peru. In general, whether it's on the lithium side, I would say within a lithium developer, a uranium asset is going to get even less attention. And it's this was an asset that I think had somewhere like 120, 130 million cap before Fukushima, when its resource was 10 million pounds. Well, it has a combined resource of about 126 million pounds today. I think the market's going to continue to strengthen here. So for us, we've not been in a rush. We want to make sure we have all of the admin done in-house. We know the right way to do it, and we're going to do it at the right time to maximize value for shareholders. And I would imagine that would be over the next 6 to 9 months, assuming the market doesn't completely fall out of bed. And it wouldn't make sense to do it if it does. So we are really putting ourselves in a position to have the flexibility to pull the trigger on that. When we feel that the market is right and that this project will get the support that it deserves. And we continue, Matt, to see loads of interest in it. I mean, I think uranium's, it's sitting there ticking along, ticking a little bit higher. But I think Cameco recently described the setup in the uranium market as the best ever. So, I think we're going to see a big run here at some point. And, we've always said our goal is to make sure that we maximize value from this asset, not only for the company, but for our shareholders. So we would look at transactions that would do that.
It's interesting, actually. You're right. People look at low-grade projects and they kind of dismiss it. And we've spoken to uranium or companies with uranium assets in Newfoundland, low-grade, Namibia, Niger, and obviously, yours kind of is of a similar make. But it's about the return on capital invested. It's you I think, just remember, you're a plus 40% IRR.
Yeah.
And you're talking about £6 million per year for 10 years life of mine based on the PEA, which obviously you say is only 50% of the asset. It's interesting. Compare that to some the best of the North American projects at the moment, £1 million per year. So it's meaningful if you can show that you have de-risked it technically and that any licensing permitting issues don't get in the way of this, and that you can finance this through to a DFS, right? So that's what you got to show the market. It would then be one of the larger projects globally if you can do that. So easy to forget sometimes.
Absolutely, Matt. What I would say, and you. I mean, you'll understand this. Lithium is a very challenging mineral. There's plenty of lithium in the world, but there's not a lot of lithium that you can extract and that you can extract economically. That's the issue. It's challenging. It's often a science project. Uranium, yes, people think of uranium and nuclear, and there's that side of it. So there's complexity from that. But the way this uranium is hosted at surface, now that we've also been able to prove that we can pre-concentrate, you can bring that other 50% of the resource into the economics, extend the mine or improve the economics, or both. But it will be a relatively simple operation. It's low capex, it's low opex. Yes, it's at 4,500 meters, but you look at the number of mines in Chile and Peru that are at that altitude. It's very doable. So I'm not trying to say anything is easy in the mining world, but this would be one of the more straightforward deposits to develop and move into production.
That's interesting times. Like I say, few more baby steps to go before you can I think people will start valuing that for you and reflecting that in your enterprise value or market cap for sure. Back up in Nevada, we've referenced it. U.S. government seems very supportive broadly. What's it actually like on the ground in Nevada? Because we've heard some people saying it's just actually, if anything, it's got tougher to do business there. Are you finding any issues?
I mean, the main issues we've had is securing drills and getting assays. The assay labs have, it's taken us for some of our drilling up to 6 months. And we've actually cured that by finding a new lab that was starting out fully, QC, QA. So everything's good on that front. It's a well-known group. And our timing was good to get in there. So I think with that, we've managed to short circuit some of those issues. We find Nevada a great place to operate. I mean, there's quality mining people. I think it would be, lithium is so nascent that there's not that many quality lithium experts, if you like, out there. So I think, again, people should remember that when we acquired Plateau, we acquired, to my mind, two of the best in Lawrence and Ted. Guys who had discovered a unique lithium asset and taken it to battery grade within a 2-year period. And they learned a hell of a lot about lithium processing and unique styles of mineralization. And that's been a big help for us. It's a more challenging deposit in terms of the met side of things in Falchani. As I mentioned, the purity of Falchani is really intriguing. Sedimentary clay stones, there are a number of impurities you have to deal with, but the nice thing for us is none of those impurities are deleterious. You don't have uranium or arsenic issues, and it's just a process of moving it through the flow sheet. So that has taken some time, but we've made great project on that. And I think in DRA Global and ANSTO, we have two of the best technical organizations on the planet. And ANSTO knows lithium and uranium backwards. I mean, that's their backyard. They're Aussies. I mean, they started out on the uranium side. They got a lot of the Aussie hard rock lithium players. And then, a lot of global companies, again, like Bacanora, have used them. And so they did a first-rate job at Falchani. And the only issues we've had is I just couldn't believe how smoked Australia really has been by COVID. I mean, I think if they had their time again, they'd probably deal with it a little bit differently. But it's ripped through them again. And so that has caused us a few issues for delays. But in general, yeah, we might be a few months behind, but I think the progress we're making on the drilling and we had a great team on the core drill that's been here. The results have been really good. I mean, we announced some initial results. We've been able to high grade some of the resource and very much validate the scale. Because if you remember, that was a very large resource that the company put out, and I think it had some people scratching their heads. Well, I think the drilling we've done has really validated that and built on that. So I think as we get into PEA and beyond, our ability to have know our mine plan and where we would start drilling and mining and everything, is clearer and clearer. So we'll be making great progress. I mean, yeah, we live in a post-COVID world, and there are some challenges with that. But Nevada has a lot of strong technical people. Yes, the permitting side of it, you have to jump through hoops, but we can do that. And we know that we have to be best of breed on the environmental and cultural side. And, whether it's because we're Canadian by background, but we don't have any issues with that. And I'm not knocking anyone by that comment, but I think also for us, it's nice that we're a little bit behind Lithium Americas and Ioneer in terms of the development phases. And we've been able to learn a lot from, the issues that they've seen. And, we have a great relationship with those guys. I mean, my view is all of these projects and more have to be built. And, we have very good relationships with them. We have a good relationship with Albemarle, who are just up the road at Silver Peak. So, it's very, very interesting times. You'd have seen the IEA last week and what they're saying.
Yeah.
These projects have to get built. And I think there is a real realization. I was at a roundtable event in Reno yesterday where they brought together government, the developers like ourselves and Lithium Americas and Ioneer, and we discussed how can we really drive this forward, because Nevada has a huge opportunity to be a major player in the lithium world. But, you've got Panasonic and Tesla with the factories, and you need to just make sure the infrastructure and everything is around that. But I think Nevada is well positioned, to ultimately have a turnkey lithium a big lithium producing base from soup to nuts, where you get the raw material, you process it, and maybe even recycling. I mean, you've probably seen one of the founders of Tesla now driving the Redwood complex here. So there's a lot of people are waking up and understanding the benefits this can bring to Nevada and America, and as long as it's done right. So again, I think the beauty of TLC is its location and the benign environmental and cultural environment that we think we have, and that's not to disrespect anyone. And we're doing all the work to validate and showcase that.
Okay, Simon, I appreciate the update. Just want to sort of check in with you guys, because I think it's hotting up. Lithium's hotting up again, for sure, and it's really a case of trying to identify the companies who can take advantage of that, who's going to stall and who's financially constrained and who's technically constrained. It'll be an interesting race to the finish over the next 12 months, I suspect.
Yeah. I think you're right, Matt. I mean, it's great to see the sector doing as well. But like the IEA said, we got to get on and we got to get these mines built. I mean, that's the key thing. There's no point in these mines coming on in 5 to 10 years. They've got to get the momentum. They've got to get the support. And I think it's taken some time, but I think the politicians are waking up to that. And you certainly can see that the end users are taking matters into their own hands. You're seeing the autos go up change. You're seeing a lot of the OEMs do that, and that's going to continue. They need to secure these minerals, and lithium has been stated by many major experts in the world as the key piece that you can't get around in the battery. And so if you like, to my mind, it is the most critical of all the critical minerals.
Powered by nuclear. There you go.